look who's here now, Eddie Ghabour. All right, Eddie, a 3.7% inflation rate over the last year, ticking up a little. What does that mean for the markets, you think?
So, look, I think one thing's clear is the battle with inflation is far from over, and it's going to stay sticky for a while, especially with energy prices staying where they are. So if they stay at these levels, you could see a reacceleration of inflation as well next month and the month after. And that's the Fed's worst nightmare. So I think the market right now is trying to digest the Fed's next move. Look, I wouldn't be surprised if they don't raise in September because that's kind of what they've conditioned us to think, and they've kind of followed their game plan. But they're not done raising rates, in my opinion.
Well, you're going to get an argument this morning from Lauren here, who is quoting Wall Street sources, saying that there's going to be rapid declines in interest rates. Next year, was that?
In 2024.
In 2024.
Yes.
OK, look to 2024. Any chance of rate declines in 2024?
So, look, historically speaking, the only time the Fed aggressively cuts rates is if they break something. And so if we're going into a recession, which I still believe we are, then I would agree that they are going to cut rates. But they're not going to cut rates if the labor market stays tight and inflation stays high and unemployment stays at the current levels. They're trying to get inflation down to 2%. That's 50% cut from where we are now. You're only going to get there, in my opinion, with a recession unless they change their target to 3%.
OK, so you're not piling into stocks at this point, correct?
No, India is an area, as you know, that we're bullish on. We've been buying dips in India. We actually did trim on Friday, India, because it hit a 52-week high. But we're going to be looking to buy back because that's a growth story for many years ahead of us with what these tech companies are going to be investing in that country.
What was it an ETF from India that you invest in and that's done very well? What was it?
It is. INDA is the ETF that we hold for clients. And again, I think the trend there is going to be taking business from China into India, and it could be a multi-year growth story. So we'll keep buying dips, but we will sell some rips as we tactically manage throughout this time period.
Apple is good news for you. In their announcement yesterday, they were talking about moving iPhone production to India. That fits your narrative, doesn't it?
It sure does. And I think that's going to be a trend. Amazon has talked about increasing their investing in India as well, too. Now, the short-term risk here for companies is if China looks at that as a war against them from a business standpoint, is it could retaliate. But again, in the long run, I think China is ultimately going to be the loser. India is going to be the winner. So we're glad that we got in early, and I think there's still plenty of room to run here over the next couple of years.
INDA. We'll watch it. Eddie Ghabour, thanks for joining us. We appreciate it.